Okay, good afternoon. Thanks everyone for joining us today. Today we are doing part 2 of our Affordable Care Act compliance seminar with a focus on IRS reporting. And just before we get into the meat of the things, we've got a little bit of housekeeping to do. First of all, if you've got a question during the presentation, please submit that via chat. The lines are muted, so we won't be able to hear you if you ask us a question on the phone. But if you put it on chat, we'll see it during the presentation. If we get a chance, we'll answer it. If not, we will absolutely follow up with everybody who submits a question via email. So we will get you your answer whether you hear it live on the seminar or we get it to you a little bit afterwards in form of an email. If you're having trouble during the presentation, if you're missing the attachment or anything like that, please email aca@hbsolutions.com. We'll be watching that email address too, as well as the chat to help you out in any way that we can. So let me get started by showing you our agenda for the day. There'll be a brief introduction about HB Solutions, a little bit about the ACA overview, and then we'll get right into the meat of today's topic, which is the IRS reporting requirements for 2015 and beyond. Our presenter today is Bill Lowe. He's a leading consultant for the ACA and one of our lead consultants here at HB Solutions. He's an expert in the field, and you're in very good hands with Bill today. And last, before I turn it over to Bill, the best way to stay up to date on the news on ACA compliance and anything that comes in the way of a development is to visit us at acahelp.com and to follow us on LinkedIn. We're HB Solutions, a subsidiary of Harris Beach. And one reason to go ahead and do that is we have some updates that are planned for the next couple of weeks, and as we get into the year-end 2015, and you want to be sure you have access to those as well. So with that, I'm going to turn things over to Bill.
All right. Thank you very much, Mike, and thank you all for joining us today. We've got a fair amount to cover in a pretty detail-driven topic, but we'll try to get through it in the allotted time we have here. And again, as Mike said, please just feel free to send any questions you may have through the chat feature. To the extent we can get to them during the call, we will, but otherwise we'll be sure to respond to you directly afterwards. So first, a little brief introduction into HB Solutions. We're a wholly owned subsidiary of the law firm of Harris Beach, and we are solely dedicated to providing Affordable Care Act compliance consulting services. We offer kind of a multi-step service that provides basically a one-stop shop for ACA compliance. And as Mike indicated, there's a lot more information on our website if you want to check that out. So a brief overview to put things in context first, and that when we're looking at the ACA and the implications that it puts for on employers, we have two kind of major concerns. And first, that would be the employer mandate, and that was primarily covered in our first presentation. The second piece is the IRS reporting requirements. The second kind of component of the real burden that's placed on employers under the Act, and that will be the focus of our discussion today. So first, just a little overview of what we're going to get into today. Start out with a little background. So I'm going to explain the two separate types of reporting under the ACA, what the purpose is behind this reporting. Next, we'll just go into who must report. So we're dealing with two new statutory requirements that place different burdens on insurers and self-insured employers, as well as all large employers for purposes of the Act. So I'm going to go over these requirements and who must receive this information. We'll also spend some time discussing the forms themselves. We're talking about 4 different forms. That's the 1094B and 1095B, and the 1094C and the 1095C. We'll discuss both, but really the focus here is going to be on the 1094C and the 1095C, as those are going to be the ones that are most relevant to all of you and your organizations. We'll also get into some methods and timing. We'll cover how the forms must be filed or distributed and when they must go out. And then finally, we'll just conclude with some additional considerations. Okay, so a little background into reporting. The reporting requirements were established through the addition of 2 new provisions to the Internal Revenue Code, which created 2 new types of reporting to the IRS. So first, we have IRC Section 6055. So this applies primarily to insurers and self-insured employers, and it requires annual reporting regarding all individuals receiving minimum essential coverage, or MEC. This requires reporting to the IRS and responsible individuals who are covered individuals under a plan. This information is going to be used by the IRS to assist in the enforcement of the individual mandate. And then second, you have Section 6056. This provision requires all applicable large employers, and again, this is those with 50 or more full-time and full-time equivalent employees, to prepare annual reports regarding coverage offered to full-time employees. This applies to both self-insured and fully insured large employers, and it will involve reporting to the IRS and employees on an annual basis. And this reporting has two purposes. First, it's to aid the IRS in enforcing the employer mandate against applicable large employers. And second, it's to assist individuals in determining whether they will qualify for a premium tax credit through the exchange. And so these two sections, 6055 and 6056, to the IRC will drive all of the new reporting requirements under the ACA. And a point that's probably known to most of you already, and if not, I imagine it will be towards the end of this presentation, is that these reporting requirements pose a really unbelievable burden on employers. And for many employers, simply gathering the necessary information to complete the reporting is going to be a difficult task on its own, not to mention going through the process of transferring that information into the IRS forms and going through the full reporting process. So just a general note that I think it's important to make clear at the outset here is this process is one that's not to be taken lightly because as many of you I'm sure are already aware, it's a very involved process. So who do the responsibilities fall to under each statute? Who's actually required to report? So under Section 6055, which again is going to involve information on individuals receiving minimum essential coverage, for employers with self-insured plans, regardless of size, they must report under this provision. Employers with fully insured plans will be able to rely on their insurance carrier to file this information for them. And then as for Section 6056, all applicable large employers, so whether you're self-insured or fully insured, you must report on the coverage offered to ACA full-time employees. And this section only applies to large employers, which again under the Act is going to be those with 50 or more full-time employees. And generally, employers should be aware of all four forms that are listed on this slide here. But again, our focus is primarily going to be on the C-Series forms, as those will be most relevant to everyone here. And this chart, I think, kind of nicely lays out the basics regarding the reporting requirements based on employer type. And a few key takeaways to take from this chart is that, again, fully insured employers are only responsible for 6056 reporting, so those C-Series forms. And then self-funded employers are responsible for both 6055 and 6056 reporting, but those who are large employers are going to be permitted to do combined reporting with the C-Series. So a very important note to those of you who are self-funded, who qualify as large employers. And so then jumping right into the C-Series forms here, I think it's important to first discuss some of the information that employers need to gather to complete these forms. And the most important kind of piece of information is that you'll need to identify all ACA full-time employees for each calendar month. So this will require tracking and recording of actual hours of service on a monthly basis. And for many employers, this is really the most significant issue for compliance. In my experience with the clients that I've been working with, it's very rare for an employer to be truly tracking all hours of service for all employees. So, we start with this one, and this one is by far the most important one from my perspective. You'll also need to determine the total number of employees for each calendar month. You'll need your employer identification number, the Social Security number for all full-time employees. You'll also need to identify someone to serve as a contact person for the IRS to contact if it requires more information with respect to your filings. And I think this is a very important designation because you'll want this employee to have knowledge regarding benefits and payroll, as well as a firm understanding of your compliance actions. They want to be fully aware of the things you've taken, the steps you've taken rather, to get yourself into compliance. You also need information about the offers of coverage made. So specifically for each full-time employee, you'll need to know the months during the year when minimum essential coverage was offered, as well as overall monthly enrollment information. And then finally, for self-insured employers, you also need enrollment data about each covered individual. So that would be the names and social security number or date of birth of all covered dependents, and the months covered, months that these folks were covered with minimum essential coverage. And I'll get into these elements a little later. Okay, so now just the details of the forms themselves, starting with the 1094-C. So this is technically referred to as the transmittal of employer-provided health insurance offer and coverage information returns. So they gave this form a very basic title, but really all this is the transmittal form or cover sheet. So all applicable large employers are going to be submitting this, whether they're self-insured or fully insured. If you have over 50 employees, you will be submitting this form. And it will go to the IRS together with a copy of all 1095-C forms, which we'll get into next. So on the 1094-C, Part 1, this section, it's fairly straightforward, and it's just going to require some basic identifying information about the employer. So things like the address, the EIN, contact information, which I just mentioned. Part 2 requires some more specific information. You'll need to provide the total number of Form 1095-Cs being submitted, whether the employer is part of a controlled group of related entities. In this section, employers must also certify whether they're eligible for any form of alternative simplified reporting or transition relief. And this section also contains a part where a representative of the employer must attest under the penalty of perjury that he or she has examined the form and all attached 1095-C forms and believes their contents to be true, correct, and complete. So this really reinforces the importance of ensuring accurate records are maintained because before putting your name on that line or requiring one of your subordinates to do so, you're going to want to make sure that things have been done properly and that you're reporting to the IRS accurate information. And continue with Form 1094-C, we have Part 3. This focuses on monthly information regarding the employer and coverage offered. This is basically a 12-month grid. And in column A, this will ask whether the employer has offered minimum essential coverage to at least 95% of its full-time employees and their dependents for the year. So you must mark yes or no for each calendar month. Column B calls for the number of full-time employees in each month. Column C, the total number of employees in each month. So these two, again, highlight the importance of tracking monthly information. Column D is whether the employer was part of a control group of entities in any month. And column E asks whether the employer was eligible for any transition relief from the employer shared responsibility provisions for any month. And then finally, Part 4 of the form. This will apply only where the employer was a member of a control group of employers. And this requires the name and EIN of each of the other group members. So these are just examples of each section of the form. Again, this is Part 1, which is just the general identifying information. Then we have Part 2, and the one thing I'll call out here is just that very bottom line. This is where the signature goes for certifying the accuracy of the form. And then Part 3, as I just kind of walked through, this is that 12-month grid where monthly information on the employer and coverage offered will be provided. And then finally, Part 4, which again only applies if you're a member of a control group. And here you can see that you'll enter the EINs of all their members of that control group. And then next we have the Form 1095-C. And this is the employer-provided health insurance offer and coverage form. This is generally referred to as the employee statement. This must be completed by all large employers, both self-insured and fully insured, and it must be provided to each individual who is an ACA full-time employee during at least 1 month during the calendar year. A copy of each 1095-C goes to the IRS, again with the employer's 1094-C. It's important to note that fully insured and self-insured employers have different responsibilities when completing the Form 1095-C, and I'm going to walk through those differences as we go through the form. But the form has 3 separate sections. So Part 1, this must be completed by both fully insured and self-insured large employers. And this will require basic identifying information on both the employee and the employer. So for the employee, you'll need address, name, social security number. And for the employer, you'll need name, address, and EIN. And then Part 2, this section must also be completed by both fully insured and self-insured large employers. This consists of 3 lines, which I'm going to review in pretty great detail here. Line 14 requires the employer to enter a code to indicate the specific offer of coverage made to the employee in each month. So the Form 1094C, 1095C instructions contain an entire section regarding these indicator codes for employee offer and coverage. And what they do is they provide us with 9 separate codes to address the various types of coverage, if any is offered, to the employee and his spouse and or dependents. And I'll get into those in just a moment. Next, you have line 15. And here the employer must provide information that specifies the amount of the employee share of the low-cost monthly premium for self-only coverage that also satisfies the minimum value requirement. And if on line 14 a no offer of coverage code is used, then line 15 should remain blank. And finally, line 16. Now this must only be completed if one of the safe harbor codes from the instructions is applicable in any month. And as is the case with line 14, the instructions provide us with the 9 distinct codes to be used in this line. And in Part 3, this section must only be completed by self-insured large employers. And this calls for identifying information regarding any other covered individuals. So here you'll provide the name, social security number, or date of birth of covered dependents, and it also requires an indication of which months the individuals received coverage. So again, here's that Part 1 of the 1095C, which is just the general information on the employee and the employer. And here's Part 2. And this I'm going to go through in detail now, but first just, if you can take a look, you'll see that this appears to be fairly straightforward. It's just kind of this grid where you've got 3 lines and a field for every month. But as you'll kind of see as we get into it here, this is the most complicated section for employers to complete and is also the most important for compliance. So for those of you who have gone through the labor of reading the instructions, this was probably the part where your eyes started to glaze over. They've tried to go through great detail to put these codes in context and to describe what's required for these lines, but it's just really not straightforward. So it requires some real careful work and attention to detail when going through them. So we'll start with line 14. Again, this line provides information regarding the specific type of coverage offered, if any, to the employee, the employee's spouse, and the employee's dependents. So for each employee who receives a 1095C, a code must be entered for each calendar month in line 14. And if the same code applies for all 12 months, you can use the all 12 months box. And as I mentioned earlier, the instructions give us 9 distinct indicator codes for line 14. And the next 2 slides contain the language used in the instructions to explain each code. I won't go through each one in detail, but I do want to comment on a few of them. First, you have code 1A, which is the qualifying offer, which is a minimum essential coverage providing minimum value that was offered to a full-time employee and the employee contribution for self-only coverage was equal to or less than 9.5% of mainland single federal poverty line and at least minimum essential coverage offered to the spouse and dependents. So kind of what you need to know about this one is that it's incredibly rare for it to apply because it requires single-only coverage to cost less than $100 per month. But in the event this does apply, you can skip line 15. So it's important to determine if you can utilize it because it potentially makes your reporting obligations a little simplified. On the other hand, code 1E is generally the most frequently applicable code. This will apply where coverage providing minimum essential coverage and minimum value is offered to an employee and at least a minimum essential coverage was offered to the spouse and dependents. So again, 1E is generally the most frequently used code for line 14. And then this slide contains the remaining line 14 codes. Generally speaking, these will be used less frequently or in very specific or unique circumstances. So with code 1G, for example, this is of significance for all self-insured employers. This will apply in a month where an employee was not full-time and enrolled in self-insured coverage. So this code could be used by a self-insured employer in a couple scenarios. Maybe a part-time employee receiving offers of coverage, employees who retired during the year but continue receiving coverage after that, or employees who are on COBRA. Another worth mentioning is Code 1H. This applies where no offer of coverage is made to a full-time employee in a given month, or the coverage that's offered is not minimum essential coverage. And again, one of these 9 codes must be used in each month for each individual who receives a 1095-C. And moving along to line 15, as I mentioned earlier, this is used to report the amount of the employee's contribution towards the lowest monthly cost for self-only minimum essential coverage that satisfied minimum value. You're only required to complete this line if you used code 1B, 1C, 1D, or 1E in line 14. And this information in line 15 will allow the IRS to check affordability. And this section in particular can present challenges for employers with multiple plan offerings or contribution structures that vary depending on maybe employee classification or employee group. Unionized employers provide a great example for this. So where within a given bargaining unit you may have tiering with respect to contributions towards coverage, the employee contribution amount may differ greatly from employee to employee. So in many cases, filling out line 15 may not be as simple as just applying the same number for every employee in every box. This may fluctuate greatly throughout your workforce. And then rounding out part 2 is line 16. And again, similar to line 14, one of 9 codes must be used in any month where one is applicable here. These codes are referred to as the Section 4980H Safe Harbor codes. And basically they're going to be used to identify months where the employer cannot face a penalty in connection with a specific employee. But kind of a key piece here is that assumes they're being used properly. So it's important to really understand what these codes mean and when you can apply them. The next 2 slides, again, just like in line 14, have descriptions of all 9 codes. And several of these are very straightforward, as you'll see. The first one, for example, 2A, this is the employee was not employed during any day of the calendar month. So, for example, you have a full-time employee who was hired in June. This would apply in January through May. 2B, you'll use this for months where the employee was not a full-time employee. 2C, this will be the most important code used, and this means the employee enrolled in coverage offered. So regardless of any other codes that may apply in this line, in each month that 2C applies, you must use it. So this will trump all of the potentially applicable codes. And 2D, this will apply during any month that is part of what's known as a limited non-assessment period. This phrase refers to several possible scenarios that are explained kind of in detail in the instructions, but the most common would be months during an initial measurement period or months during an individual's waiting period. And then finally you have 2E, and you'll use this if the multi-employer plan interim relief rule applies, and I'll describe that specific rule in a little detail in just a minute. And then here are the remaining line 16 codes. You'll note 2F, 2G, and 2H. These apply to the 3 affordability safe harbors. So for an individual who's enrolled in coverage, even if one of these would apply, you're still going to use 2C. But for any employee who opts out of coverage and the coverage that you offer that individual satisfies one of the safe harbors, you're going to enter one of these codes. And then also 2I. So this applies to non-calendar year transition relief and is potentially relevant in 2015 only for employers with non-calendar year plans. So it can be used for months before the start of the 2015 plan year if the employee was ultimately offered minimum essential coverage that provided minimum value and was affordable at the start of his or her 2015 plan year. Importantly, again, this will only apply in 2015, so this won't exist in 2016. And so all of that information we just went over is just for 3 lines on each employee's form, which again, when you take a look at the form, seems fairly straightforward. But this kind of speaks to the complexities that I talked about at the outset, that an awful lot goes into just filling out this one section of each employee's form. And as I talked about the multi-employer interim relief rule, these next two slides detail the guidance that's available right now with respect to the multi-employer arrangements. So under this relief, for 2015, an employer will be treated as offering coverage to an employee if that employer is required to make contributions on that individual's behalf to a multi-employer plan. So these employers must also complete a 1095-C for these employees. Under prior guidance that was out, it was really unclear how the employer was going to complete lines 14 through 16 for these individuals. And that's because in most cases, employers don't know which of their employees are actually enrolled in a multi-employer plan, nor do they have information regarding the nature or cost of coverage offered under a multi-employer plan. So the 2015 instructions attempted to address this issue by providing that an employer utilizing this interim guidance should enter code 1H, which means no offer of coverage, on line 14 for any month the employer uses code 2E, the multi-employer interim relief code, on line 16. So by entering 1H in line 14, line 15 can be blank. The catch with this relief, though, is that code 2E can only be used if the coverage provided under the plan is affordable, provides minimum value, and covers dependents. And the issue here is that the instructions provide us with no guidance for what employers should do if a multi-employer plan refuses or is unwilling to make these certifications. So there's still some uncertainty on how this is going to play out, but what we're seeing is that for employers who do have a multi-employer plan, it's kind of best practices to reach out to the union or to the fund administrator and try to get some certification on those pieces, the affordability, that it provides minimum value and covers dependents. But without that, again, it's a little a little unclear at least as to how the IRS is going to interpret forms using these codes. And sticking with the multi-employer relief, it's just important to remember that the employer always remains responsible for reporting under Section 6056. So regardless of whether it participates in a multi-employer plan, the union is not responsible under any scenario for Section 6056 reporting. It's always going to be with the employer there. Now to Part 3 of the 1095-C. And again, only self-insured employers are required to complete this section. And this is where information on spouses and dependents will be provided. We're finding that this section here is presenting challenges for many employers because they're not often in possession of this information. Instead, employers are required to rely on a TPA to provide this, which presents issues. In particular, the timing of when that information is going to be provided and the format it will be in when it's sent from the TPA. So if you are a self-insured employer, it's important that you have an understanding of how and when you're going to get this dependent information from your TPA, because again, it's going to be your responsibility to report on it. And so those are the forms. And again, the focus there was on the C series because that's what is going to be relevant for most of you. The next issue is the how and when of actually reporting. So all reporting is done on a calendar year basis. So you're going to report on 2015 information in the first quarter of 2016. So first taking the IRS. Each employer's 1094-C and copies of all 1095-Cs must be filed with the IRS no later than February 28th or March 31st if done electronically. The IRS is encouraging everyone to file electronically, but it's requiring all employers filing at least 250 forms in a calendar year to file electronically. And then as for providing statements to employees, all statements must be provided to employees no later than January 31st. And in a minute, I'll explain the permissible methods of distributing these forms to employees. But for some context, I guess, when we're talking about both of these forms, the B series and the C series, the primary purpose is to provide the IRS with the information necessary to make determinations regarding liability under the Act. And as you can see from what we've gone through so far, they created a system where the majority of enforcement-related tasks are placed squarely on employers through the completion and submission of these forms. So by requiring employers to have these forms to employees and the IRS during the first quarter, the IRS is then going to have the ability to compare the information employees submit on their own personal taxes with the information filed by employers on the 1094, 1095-C to identify noncompliance or any just even inconsistencies that at a minimum may trigger some audits to seek additional clarification. Now I just want to briefly discuss electronic filing. And again, as I mentioned, the IRS is encouraging all employers to file electronically and is requiring it of all filing more than 250 forms. To assist entities that are required to file electronically or electing to do so, the IRS has created several resources that it's made available online. The most significant of these resources is Publication 5165. This is the Guide for Electronically Filing Affordable Care Act Information Returns for Software Developers and Transmitters. So this specifies the communication procedures, transmission formats, business rules, and validation procedures for all returns filed electronically through the IRS system. And that IRS system is a system that the IRS has developed specifically for handling all ACA filings. The key point here is that all employers are transmitters. So any employer filing more than 250 information returns must do so through the IRS system and in accordance with all of its procedural and formatting requirements. Unfortunately, this is not going to be as simple as just emailing the IRS a PDF version of all the forms. It's a much more involved process, and to the extent any of you have gone through Publication 5165, you're well aware that that's the case. So before an entity can actually submit files through the IRS system, several actions must first be completed, and these kind of speak to the complexities of the IRS transmission through the IRS system. So first, each entity must register, obtain login credentials, and activate an IRS user account. So to do so, a responsible official must be identified within the organization, and this is who will be required to complete the registration process for that entity. Second, the entity must apply for a transmitter control code, which is then sent in the mail by the IRS. This TCC application process only became available late this summer, and currently some are experiencing multiple month delays in this step of the process. Or while it may have moved along recently, if you applied for it a month ago, you were seeing a multiple month delay. And so this is definitely a concern for those who have not yet applied, because there's no definitive time frame out there for when you can expect this to be provided to you. And so then after you've successfully registered and received a TCC, the next required step is to participate in testing. So all transmitters must complete an error-free communication test before e-filing any ACA information returns. To do this, the transmitter must prepare a transmission in the IRS system's required format, submit the transmission for processing, and receive a receipt identification number, and then obtain the acknowledgement and accompanying error file if there is one. Only after all of those steps have been done successfully will an entity be permitted to e-file through the IRS system. And testing very recently became open for transmitters. So the key considerations here with this whole process is, if you're e-filing, you must do so through this IRS system, and before you'll be allowed to file, you must complete each step of the process, which again is both time-consuming and complex. So registration and testing should really be priority number one if you haven't started already. And so that's an overview of how employers must file with the IRS. Now we'll just briefly cover how to distribute the 1095-C to employees. Again, statements must be provided to all ACA full-time employees no later than January 31st. This year that's a Sunday, so that deadline is actually going to be February 1st. And then finally, the forms can be sent to employees in two formats. First, in paper. So this is by mail or hand delivery. And second, electronically, via email or posted on the employer's website. But the form can be distributed electronically only if the recipient first affirmatively consents to receiving electronically. So for those of you who want to distribute electronically, it's important to be proactive in obtaining the required consent from the employee. And this is spelled out a little bit in the instructions, but very important to remember if in fact you are looking to distribute electronically. And with that, that concludes our summary of the reporting requirements. I've seen that some questions have come in, and I would encourage folks to, I'll try to go through some of these here. It looks like some may require maybe a written response or a little back and forth. But to the extent more questions come up down the road, please feel free to, again, reach out to us through any of the methods that Mike laid out earlier, and we'll be happy to get back to you with answers. Just going through some of these right here, what does transition relief really mean? That depends on what type of transition relief you're talking about, but just, I guess, a brief summary is that when the final regulations for the employer mandate came out, included in those were a series of what they referred to as transition relief. And these forms of relief were basically put in place by the IRS to account for unforeseen scenarios or potentially problematic scenarios in the first year of enforcement. And a good example is the transition relief that applies to non-calendar year plans. So the reason that they put that in place for non-calendar year plans was to ensure that to the extent some plan was making changes to get in compliance, that if they hadn't made that in their prior year, so in their 2014 plan year, they would not be penalized if that took effect at the start of their 2015 plan year. So again, there's a variety of forms of it, but basically the underlying purpose of transition relief was to account for potential areas where employers could be subject to a penalty in year one that they hadn't initially accounted for when drafting the regulations. Another question, what does the term safe harbor really mean? So safe harbors, again, if you've gone through the instructions, you'll see that they apply in a variety of contexts and can take on a variety of meanings. But a good way to remember or think about these is they're a way that you can protect yourself or you have kind of a pass against potential liability. The affordability safe harbors are the best example. So generally, for coverage to be affordable, the law says that it cannot exceed 9.5% of an individual's household income. Now, almost immediately after that was put into effect, it was clear that employers are very rarely going to know what an individual's household income is. In light of that, they created these three affordability safe harbors, those being 9.5% of an individual's rate of pay, the W-2 safe harbor, or the federal poverty line safe harbor. So again, these are ways where you can protect against liability by utilizing a safe harbor if it applies. Down here, there's a question as to why we consider 1A to be rare. That's more of an observation based on clients that we have worked with. It requires a very low contribution amount, and just in general, we've seen that it's been uncommon that employers have met that threshold consistently for employees. And it appears there's several questions about forwarding copies of the PowerPoint from the presentation, as well as the first one. Yes, we are able to provide additional copies to anyone who would like them, and we'll be sure to get those out to those of you who have commented on that. And again, as I mentioned earlier, to the extent anyone has any follow-up questions, please don't hesitate to reach out to us, and we'll be happy to provide them back to you in writing, as well as any that were sent to the chat function that we didn't answer or may require a little more of a written answer to kind of properly address. But again, we thank you very much for your time and appreciate you checking into both segments of our presentation.